investors. Today on Stocks to Watch, John Feneck of Feneck Consulting joins us. He's a seasoned commodities and mining investor with a sharp eye for uncovering opportunities in gold, silver, and beyond. So with decades of experience navigating volatile markets, John really brings a wealth of insight into where smart money is flowing and really how investors can position themselves for both protection and growth. John, it is always a pleasure to have you on.
Thanks so much, Ashley. Great to be here.
So, John, let's start with gold's momentum. Gold has been really on a strong run this year. And from your vantage point and your expertise, what are the key drivers really sustaining gold's strength? And do you see this as a short-term rally or really the beginning of a longer cycle? Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Well, it's not the beginning of a longer cycle. We've been in this cycle for a long time, I think, already, and that's something that a lot of people disagree with. But if you look at a chart of gold, you can do that on the physical side or just use GLD as a proxy. You can see that when we crossed that 1575 an ounce, gosh, I don't know, years ago now, the chart really started to get more constructive and interesting. And we mentioned on your show last year, Ashley, when gold was, I believe, trending at like 1900, it seemed, an ounce for like 5 months plus. Like I did point out that, hey guys, it's been over 150 days and we haven't closed below this number. That's what you call a chart in the charting world, like a base being built. Mm-hmm. And usually those bases break higher if you're in a bull market, and we are. So gold broke higher over 2000, which was the big round number, if you remember. And now we're sitting, 3550-ish or something when we're recording this. So it's just unbelievable to see what gold has done. But it's not unexpected in that the world is kind of upside down in a lot of different ways. And so there's kind of two camps of investors out there. One is being led by billionaires like Ray Dalio and Stan Druckenmiller and those guys that are saying, hey, this is the future. Gold's going to 5,000 plus, get on board. And then there's still the Bitcoin bros and the tech guys and all the guys that just, are asleep at the wheel with their portfolios, just saying, well, hey, I'm just going to do this, Well, hope isn't a strategy for us. We don't sit there and say just because the broad market did well in 2023 and 2024, that it's going to do this well again in 2025. So we're very proactive as investors.
And, gold is obviously getting the headlines, but I do know that silver is your largest commodity in your portfolio. So you do point to silver, copper, and even uranium as overlooked opportunities. So which of these right now excites you the most?
Definitely silver. Silver is still way behind gold in this run up. We look at that, Ashley, as the gold to silver ratio. So all it is the price of gold, an ounce of gold divided by an ounce of silver. And that number is still extremely elevated. Back in previous rallies, we saw that number closer to 35 to 50. And it was at 100 the last time you and I recorded. So it's got to go down. I don't think gold is going down to make the ratio better. I think that gold might trend at like 3,200 to 3,600 for a while. And then silver just goes ballistic, right? Because silver is at 40 as we record this. But to get three closes as we have now in a row over $40 silver is nuts. That means very good things for silver. And once we cross 43, it seems to me like 50 is inevitable. Mm-hmm. We were calling for 50 by December. We said that on your show as well. We think that's still very much intact, unless we get some type of Fed action that's going to derail that. So September 17th will be very important, I think, for investors to watch Powell. We're obviously getting a cut, but it's more important to look at what he's going to say about the path, going forward for the next 1 to 6 months.
Yeah, great insights there. And you've also really built a successful reputation, I will say, for identifying undervalued mining and commodities companies before they even break out. So we could, pare that down with gold, silver, and whatever else you think is important. But what would you say one of those one or two names, maybe more, currently on your radar right now that investors should be watching closely?
Sure. I'll give you three different buckets, and I'll name a few in each of those. And I won't go into too much detail, but enough that your investors can break down the tickers and possibly look into these opportunities themselves. So, Guardian Metal Resources, you and I have talked about this. I had Guardian at my conference in May. The ticker is GMTLF in the States, GMET.L in London. They don't have a Canadian ticker. I started, getting invested in the stock around 17, 18 cents US in November of 2023. The CEO, really young, aggressive guy, he just saw an opportunity in Nevada and went for it. He had a tungsten property in Nevada. He bought a second one last year. He's got a billionaire investor who is investing in the stock and owns about 12 to 15% of the float. That guy's name is Stan Druckenmiller. And when Stan's name was revealed just a few weeks ago, the stock just got a new life. Like it was unbelievable watching it. It went from 70 cents US up to $1.71 US.
Mm-hmm.
It has now since gotten back to like $1.05 as we record this.
Mm-hmm.
But I mean, that rally was real and it was on heavy volume. So, to start in a stock at 17 and a half, I didn't give your listeners the stock at 17 and a half, but I know we were talking about it in the 30-cent range, 35 cents. I mean, look, you don't see too many opportunities in a year and a half plus that are up 500%, right? Like this has been an absolute home run for us. So we'd encourage people to look at their recent news where they got a $6.2 million check from the US government. So they're on their way. Another one that's sort of on the periphery for us is also in the US, Helix Exploration, which is a new name for us. It's HHEXF in the States. The reason we got interested in this is, again, we love near-term production stories. We don't care if it's uranium, copper, gold. We just think that we're in a commodities bull market. So when you're a junior stock and you're getting close to production, it's a very exciting time for these CEOs that have spent years getting to the finish line, right? So literally, Bo Sears, as the CEO, is going into production. He says by early October of this year, we're literally a month away, and the stock is just sitting there. So again, Montana, great state. We have another stock we own called Stillwater, which you've met before, Ashley. PGEZF in the States, PGE in Canada. Mike does a great job, and he has. I introduced Bo and Mike a week ago because I said you guys should know each other. You're talking to the same politicians. You're in a different part of the state, but I mean, it's still the same state, right? So I try to help CEOs where I can because this is a tough business, and the more you can get an edge, legally, it works. So those are some names on the periphery. For gold and silver, in gold, I just interviewed Saf Dillon from Quest Corp literally yesterday. That's QQCMF in the States, QQQ in Canada. The reason I got into that stock, I mean, Saf just met me a year ago, and we both kind of have a similar view of the structure of a stock and what it should look like, right? And that structure should not look blown out, meaning like it's got hundreds of millions of shares. Because when you have a rally, a lot of times it's difficult for a stock to move when you have that that many shares outstanding, right? So he has these two companies, iMetal Resources, IMRFF and IMR in Canada. But Quest Corp was the one I first met him on, and that stock in December of last year had really material news that they were going after this La Union project in Sonora, Mexico. You know that Sonora Gold, SMOFF, is one of our holdings. They're in the same part of Mexico that we like. That's right near the Arizona border. It's like not in the parts of Mexico that have had serial problems. And so with Scheinbaum in office as of October 1st of last year, we really have gotten more bullish on names like Sonora Gold and Quest Corp because we think that the permits are coming. If they're not coming this year, they're coming next year, right? So investors are sometimes a difficult punch, actually, right? They want things yesterday because Amazon delivers packages by a stork in 3 hours, right? So they want their investment returns in a month or 3 months. Well, in mining, it might take a year or two, right? And so we're trying to find people to follow us that can see the opportunity in some of these names right now. The one that I'm talking about, Sonoro's at 12 cents US, and Quest Corp's at 11.5 cents as we record this. These are tremendous opportunities if Scheinbaum delivers, and I think she will. I mean, let's forget about what she thinks of these two companies. Let's look at like what she needs to do as a leader of a country that's getting bullied by, I don't say bullied by, but let's just say she's under pressure from Trump, right, in the U.S. to with these tariffs. How do you generate revenue? Well, historically, Mexico has been a great state for mining, a great country, and Sonora State has been a great state within Mexico. So I think this is just a matter of time, and so stocks like this are really going to benefit.
Yeah, absolutely. And I really think it's almost like the tip of the iceberg because she's very supportive of the work that they're doing. So I'm really glad that you mentioned that, in Mexico, not to mention, and the companies in the US and working in the US, Montana, Nevada. It's great to hear that because you also mentioned the Trump administration and the importance that he is really thinking that this is where this needs to come from. But then you have those amazing companies working out of Mexico right there on the Arizona border. So I think that these insights that you're providing and sharing really give investors, they sort of open up the aperture into what it is they need to focus on, pay attention to per your suggestions. But I will say that investors get nervous about volatility in commodities. Of course, you know this.
Yeah.
You and I sat down at your recent conference. We talked about, advice for balancing risk and reward when building a portfolio. So let's maybe dive a little bit deeper into that quickly about a portfolio that really includes gold and mining stocks.
Sure. So balancing risk within a portfolio and how those would fit in, correct?
Yes.
Okay. Yeah. So the conference you're referencing, you were nice enough to be a big part of again, Ashley. We always love having you there. Top Shelf Partners is going to do a third year in Florida this year, and we're coming up with another location as well. Both are going to be in May of 2026, so stay tuned for that. But balancing in a portfolio, it's funny. I just got off an interview, was asked the same question, and I said most traditional portfolios are 60% equity, 40% bonds, right? Well, the bond market is at a 40-year plus rally. The equity market has been in an uptrend since March of '09, which is 15 and a half years. Like at some point, you can't do the traditional stuff anymore, right? And an investor could argue, hey, well, you're wrong because look at 2023 in the NASDAQ, look at 2024 in the NASDAQ, and now look at 2025. I get it. But at some point, when the music stops and you want to sit down, like you're not going to have a seat. This is going to happen much faster
Mhm.
than people think because of high frequency trading and algorithmic buying and selling. Like it's just a fact. And if you don't believe me, go back and look at April of this year with Liberation Day, right? We're talking about tariffs and Trump. That was self-generated volatility, right? Like this was this was a good litmus test for people to see if they have the fortitude to stick in there, right? Because I would argue that a lot of investors got out this 5 to 7 days. It was brutal. Like Apple, AAPL was down 20+% in five
Yeah.
business days. Like this isn't some microcap tech stock. This is the big boy.
Right.
So if you can lose 20% in a week, good for you because I can, but most investors can't, right? And so they have to make decisions. And if they get out, my thinking is, how are you getting back in? Maybe you have an advisor that will help you back in, but most people, they're out and they miss this huge rally up again, right? Like look at March of 2020 when we had like Max Payne in COVID. A lot of people got margined out of the market and never got back in. And look at that, right? Like you missed another 5 year beautiful run in the broad market. Now, this is our time, meaning the mining sector. GDX and GDXJ are the two big ETFs in our sector. They have over 20 billion US in them. They are cranking. Both of those ETFs had great monthly closes August 29th. On August 29th on the monthly as well, gold's right around 3,500. Silver was knocking on 40. And now you're seeing follow through this week, Ashley. September 2, 3, and 4, just amazing price action in a lot of names. And this is like very exciting for a lot of the CEOs in our sector because I know how hard some of these men and women work, and to get to this point has taken some blood, sweat, and tears.
Yeah, and let's hope it continues through the year and beyond. And speaking of which, with all the geopolitical uncertainty, interest rates, et cetera, how do you see the commodity sector shaping up over the next 6 months?
Um, I think we're all systems go. The only thing that can really derail anything, including our sector, would be the Fed. You know,
Hmm.
however, if we get if Trump gets Lisa out, and or he gets Powell out before he is due to be out in 2026, I think gold gets a huge bid. I think silver gets a huge bid, and I think mining stocks might experience like a couple days or a couple weeks of selling because of margin calls, but you're going to see a rally like we're not even seeing now. It'll be much bigger and broader because anything that um, derails confidence will be followed by buying safety, and safety to us is gold and silver physical, right? And now what's cool is since our last interview is that the equities, gold and silver equities, are now getting bids, right? And so that was not present even the beginning of this year. We had to have a really good earnings season, which we did in July and August in the mining stocks to really get people more interested.
Well, John, I so appreciate you sharing these incredible insights. It's obviously clear that commodities, gold or silver, they definitely remain a critical piece of the investing puzzle, not just as a hedge, but really, I would say, as a real opportunity for growth. So, investors tuning in, listening, watching us, I think the takeaway here is clear. The broader commodities story could really make all the difference in the months ahead. So, John, we appreciate your time. Thank you so much for joining us here on Stocks to Watch. And again, this John Feneck of Feneck Consulting. Thanks, John.
Thanks, Ashley.